Welcome to today's What Moved the Market show. I'm your host Prem. It's Wednesday, October 8th, 2025, and here is everything you need to know as the markets close for today. Let's dive into the day's action. Both benchmark indices ended a choppy session in the red. The Sensex closed at 81,773, down 153 points or 19 basis points. The Nifty 50 wound up at 25,046, slipping 62 points or 0.25%. Over on the banking front, the Bank Nifty also lost ground, closing lower after a dull session. Sentiment stayed mixed as investors held back from making major bets ahead of the Q2 earnings season and amid ongoing global uncertainties. Risk aversion was the underlying theme, with investors increasingly cautious. Notably, the rupee continued to hover near its record lows versus the dollar, reflecting persistent global risk-off sentiment. As of the latest available data, the rupee settled close to its all-time trough, keeping import-heavy sectors and foreign institutional flows top of mind for traders. The weak local currency added another layer of caution to the market mood, with several funds choosing to wait on the sidelines. Let's look at the day's major movers. Titan, Infosys, and TCS were among the leading gainers in the large-cap space, driven by renewed buying in IT stocks as global tech sentiment improved and sector earnings look promising. HCL Tech and Tech Mahindra also delivered a solid performance. On the downside, Tata Motors was the biggest laggard after its JLR segment reported weaker than expected second quarter sales, tumbling 2%. Mahindra and Sun Pharma also faced the heat. In the mid-cap universe, Graphite India made headlines with an impressive 8% rally, hitting a 4-year high, while Madhya Bharat Agro surged 5% thanks to a stellar Q2 print, with profits more than doubling year-on-year. On the flip side, realty and media stocks led the losers pack as the broader market saw profit booking. Among recent IPOs, Tata Capital was fully subscribed on debut, showing investor appetite persists if the story is strong. Now let's check in on key technical levels from today's trade. The Nifty 50 could not sustain above the crucial resistance at 25,200, resulting in a round of profit booking as it drifted lower. Importantly, it found support near 25,000, which held firm today. This level remains critical for bulls in the immediate term. The Bank Nifty followed suit, testing its own support zones with no decisive breakout, setting up a likely period of consolidation going forward. Sectoral performance was dominated by IT, which emerged as the clear winner on the back of sector rotation and positive global cues. Consumer durable stocks also ticked higher, while realty, media, auto, and energy stocks saw pressure amid growth concerns and rising volatility. Volatility itself picked up, with the India VIX jumping around 4% to signal some nerves beneath the surface. Shifting gears to commodities, gold extended its remarkable run, clocking its 39th new all-time high for the year, reflecting global risk aversion. As per the latest data, MCX gold finished at an all-time closing high, while silver also advanced sharply, tracking global cues. High gold and silver prices continue to highlight the flight to safe haven assets. Crude oil prices were steady but off their recent highs, while base metals stayed in a tight range given global growth uncertainties. On the geopolitical front, news of a potential US government shutdown and ongoing global tensions kept Asian markets wobbly and US equity indices under pressure overnight. This caution rippled into Indian equities, reinforcing the defensive stance among investors and prompting a move into gold for safety. Looking ahead technically, the Nifty 50 faces immediate resistance near 25,200, with strong support at the psychological 25,000 mark. A decisive move below this could trigger further profit-taking towards the next support zone, while a bounce back could target last week's highs. The Bank Nifty, after today's retest of key support, looks set for a consolidation phase unless a major trigger emerges. The next session's cues will likely come from early corporate earnings numbers, any fresh US market developments, and global macro data releases. So what's the actionable insight for traders tonight? With volatility picking up and major indices seeing profit booking at higher levels, adopting a selective approach is wise. Focus on sectors like IT, which continue to attract investor interest, and keep an eye on key support levels on the Nifty as your risk management baseline. Trailing stop losses and being nimble can help protect gains as we head into Q2 results season. That wraps up our Market Close podcast for Wednesday. Stay tuned for tomorrow morning's wrap, and don't forget to send in your questions and thoughts. Until then, trade smart and keep listening to What Moved the Market.